Yo, I'm Mo. So when looking at a chart, people often say, Mo, every time I buy a stock, the stock just falls apart on me. Or every time that I get into something, I just instantly lose. Well, there might be a reason for that. And something that I'm going to talk to you right now is the 50% rule. So this is CCL, one of the most notorious 50% rules I have ever seen. The other one's going to be Boeing, and I'll pull that one up also. So when I look at my 50% rule, what does it mean? It means that the stock can't get above its low to its high in that 50% area. So here's your high on CCL. Here was your low. This was dating back to February and March of 2020 during the pandemic. And then you have this line going through the middle. And that was about, I probably drew that. I know it's about $32 because I've taught this one a billion times. So what this means is that you have all of this negative pressure pushing down on the stock. And where does that come from? Well, it comes from the people that were here. They were in this stock and they lost all this money, came down here, went from about $56 to about $12, $10. And they said, if I could just get half my money back, I'm going to get out of this thing, because that was a very fast fall in a very short period of time. Stock price runs up a little bit. The people that were in it up here, they say, okay, you know what? I'm going to exit right here. And you get those people selling, stock price falls on you. Same people that did not exit right here, they're saying, if I can just get half my money back, all I want is half, I'll get out. Starts to move up on you, starts to move up on you, starts to move up on you, gets to this $32 area. They made half their money back. What happens? Stock price falls right back down. Again, you can see it. You can see all these little peaks. Comes up, exit. Comes up, exit. Comes up, exit. And they're just saying, I just want to get some of my money out of here. It's just all that negative force pushing down on the stock. And therefore, you cannot break over that 50% area, which for this case is about $32. Now let's go over to Boeing. This is something that can save you so much money. Why would you couldn't go and buy this thing at 32. Also, if you're in this stock, let's say you bought it down here. Let's say that you are so good that you bought it down here. Actually, what's funny is I bought it down here from a value position, but I stayed in this thing. I stayed in this thing. It got to about this $30 area. And I did let it fall. I let it go back here. And I got lucky and I said, you know what? I'm going to exit this thing next time it peaks to that $30 to $32 area. Luckily, it peaked to $32 and I just got super lucky and ended up selling it at 32. But it wasn't total luck. I had a plan in my head. I knew that all of this was just pushing down. It wasn't going to break much through that 32. And if it got through 32, maybe it would get to 35, but it would be so temporary that it would just fall back down. So this was a great strategy for me to say, hey, I'm exiting this thing around $30, and it worked out perfectly. Let's go to Boeing. Same thing happened here. This is another stock that I bought during the pandemic. I bought it down here. I paid $99 for it. Here was that middle ground for you. And this thing had a big ran up really quickly. Ran from $80-some to, what was this, about $220, and it fell back down. I didn't do anything, and I ended up selling it somewhere right around here. But the same reason went. I knew that there was all of this pressure, and it wasn't getting much over that $250 area. You notice, we did peak over that $250 area, but what happened right after that? It fell straight back down, and it has not even come close since. So this is the 50% rule. The more you understand these patterns, the less you're going to fear the charts. I'll catch you on the flippity flop.